Hey, it's your man, Charlie P. I know it's been a minute again. I'm gonna start dropping stuff more frequently pretty soon. But I'm like, dang, man, February done got away from me and I hadn't dropped nothing all month. So I had to jump on here and say something. So today we're gonna go over an Omega setup that I caught on GBP CAD. Got about 72 pips on it, I believe. Could have had 100, but I'm like, it's Monday, I don't want to be greedy. Let me just take this profit and have a good cushion for today. But anyway, we're going to talk about that. Also, look, if you ever wanted to trade with the prop firm called The Funded Trader, they got a promotion going on right now for 95% payouts. Lifetime payouts from start, 95%. I will gladly start the challenge all over for 95%. So that's what I'm finna do. But anyway, let's go ahead and jump into this Omega setup from today. All right, let's talk about this Omega setup on GBP CAD. First thing I recommend you do is get you a cheat sheet. You see that? Omega. That's my Omega cheat sheet right there. I got all my rules written down with check boxes next to them. And I want to check off each rule as I go to make sure I'm abiding by the rules. When I don't have those rules in front of me, it does cause me to take bad trades sometimes because I forget a rule or I'm not as strict if I don't have those rules in front of me. So that's just the number one thing I recommend. But let's get into this strategy. So the first rule of the Omega strategy is you're going to see H1 consolidate between the 144 and the 50 EMAs. That's the purple and the gold line. OK, now, as you see, it did fall outside of those EMAs. It doesn't have to be between it the entire time is what I'm trying to say. So it can fall outside of it as long as the majority of the formation is between those EMAs, you're good. Also, you want it to be overbought or oversold at the same time that's happening. So as you can see down here, our Ehlers-Fisher, which we're looking at that bold green line at the bottom, our Ehlers-Fisher shows we were oversold. And it helps to have divergence as well. So you can see it from this point, it's oversold, meaning when I say it's oversold, it's below this 10 level. So we got this 10 level. If it's oversold, we want Ehlers-Fisher under that. If it's overbought, we want it above this 90 level line. Okay. But in this situation, we're looking to buy it. So we wanted it to be oversold, and it's divergent because price is going from here to an upward motion here versus on the candles. From here to here is going down. That's divergence. That's a good sign that we're about to go up. So that's rule number one. Overbought or oversold with divergence. Well, divergence is a plus. So overbought or oversold while price is in between the 144 and the 50 EMAs. Again, that is on the H1 time frame. Rule number two, you want to make sure the candle's diagonal trajectory is in the right direction. This right here will make or break an Omega setup. Here's what I'm talking about when I say diagonal trajectory. Let me pull up paint. So diagonal trajectory in this case, let's say we had something that looked like this. This is the wrong diagonal trajectory. Reason being is when you're looking at your prominent points, which this right here is a prominent point in the formation. Here's a prominent point in the formation right here. You don't want, since we're buying this, we don't want the second prominent point to be higher than the first one, or basically whatever prominent point our pass candle goes through, or our confirmation candle goes through, which I'm going to talk about in just a second. Whatever point your confirmation candle passes through. So in this situation, let me just draw this all the way out. This would be my confirmation because it passes through the last prominent point in my setup. Because this is higher than this one, I don't like that. What I would want to see is one that's lower. So I want to see something more along the lines of like this. Okay. And then here, This is our last prominent point in the formation before we got our confirmation. And then now the trajectory is in the right direction. Basically, this is really all you're looking for. It's like a trend line break. That is a ugly, what's the name? But essentially, you're just looking for like that's ugly too. Let me get off paint. I can't draw. So what I'm saying is right here. Now, first of all, this looked like you could have took this trade Friday, because you could have said, well, this past this prominent point right here. I wouldn't consider this a prominent point. Reason being, it's just not sharp enough. It's got a little bit of consolidation going on right here versus something like this is up and right back down. That's prominent. This right here, up, right back down. This little piece is prominent. And then the same thing happened right here. And this is what I said was my prominent point, or my most recent prominent point. This one right here. And as you can see, it's lower than this prominent point, which is the one right before it. So our trajectory of prominent points is in the right direction, or again, it's just another way of looking at a trend line break, because essentially we had this trend line broken. That's really all we're doing. I just look at it a little bit differently. But for trend line people, just make sure your trend lines are going in the right way. All right, so once you have established that your trajectory is going the right way, the next thing you need is a confirmation candle. In our case, our confirmation candle happened right here. This green candle right here that was in London session. It can be the M15 candle or the H1 candle. Since we're on H1, it's easier to just look at it this way right now. But H1 closed past our last prominent point. And you want to have your line drawn on the body. Do not worry about the wick of that prominent point. Only worry about the body. So I have my line drawn on that body. H1 closed past it. We now have confirmation. All I'm doing at this point is going to the 15-minute time frame, and I want price to, I'm going to wait on price to come back down and grab my 50 EMA, which is my gold line once again. So that's what I did. I waited on price to come back down, and it happened in New York session. It grabbed my 50 EMA. And I want to wait on it. I want it to come under my 50. So if I'm buying, I want to get in under the 50 EMA. If I'm selling, I want to get in above the 50. So I wanted this to come down under the 50. I hopped in the trade, and then we rode it out. Only thing, or the only caveat to that rule is your 50 EMA. If you're buying it, it cannot be. Why am I doing my hand like that? That's awkward. The only caveat to that rule is your 50 EMA, though. If you're buying it, it needs to be under the 144. It cannot have crossed over the 144 to the upside yet. So you want this to come pretty much through the 144 and through the 50. Then you can buy it. Okay, so had this been crossed over already, and then price would have came down and hit it like, let's say right here after the gold had already crossed over the 50, it would not have been a valid setup. We would have had to just let it go. But since it went ahead and did it when the gold was still under the 144 EMA, then we were good to go. This was valid. We took it, and you avoid a lot of drawdown that way. So when I got in the trade, price was actually I got in about right here, I think. But price was down here. I got in, and because of the spread, it put my entry up here. I never had any real drawdown because as soon as I got in, price really just went on up. So this was a really good trade today. But yeah, I feel like I remember a really good example I wanted to show about these prominent points that might help y'all out, man. And I'm trying to remember what, oh, here we go. Bet it was on EJ. Here's a good example of that prominent point thing I was telling you about that you can avoid. Look in this box right here. And this is the last thing I'm gonna talk about, and then I'm gonna close the video out. But check this box out. Here we had price. H1 was hovering between the 144 and the 50. We're oversold. Cool. But the rule that was not met, and why you would have wanted to avoid this trade and don't buy it, is because the trajectory was off. This right here was a prominent point. Then it came up, it made another prominent point right here. But guess what? This prominent point is actually higher than this one. You can't, let me zoom in so you can really tell. And then let me move over to where we're looking at. See, it's hard to tell because but you can see this kind of poking above it. Here's another way we can look at it though. Check this out. Look at the closing price on this. If you want to see the closing price on a candle on MT4, just hover your mouse over the close line of it. So we see that this closed at 143.225. That 225 is what we really want to pay attention to. 143.225 versus this one closed at the 224. So it was barely over it, but this was higher. Remember when I was in Microsoft Paint and I'm telling you it needs to be, if we're buying it, you want your last prominent point to be below whatever it came before. So on this one, on EJ, the last prominent point was higher. So that made this trade invalid. So when it came back down, it looked good. Other than that, that was the only rule that wasn't met. Other than that, if we would have went to M15, let's say I would have said, forget that rule, right? And I went to M15, but when it came down and came up under my 50 EMA and I would have bought it right here, you see what would have happened. I would have got my behind jacked up. So that's why that rule is extremely important. Make sure your trajectory is right. I am making so many weird hand movements today. I don't even do this. This is not a natural. This is why I know I hadn't made a video in a long time, because I'm trying too hard. But anyway, that's really it, man. That's the Omega setup that we took today. One more thing I actually do want to point out while I'm thinking about it, because I know I used to promote Hanko Trade, which I no longer promote them. Overall, I'm still happy with them, but I am moving on to a different broker for my personal account needs. Reason being, I got a couple of price gaps on Hanko Trade today that didn't show up on any of my prop firms. This one right here, if you look here, this is the Hanko Trade chart versus if I go back to like my Forex funds or something, for example, on GBP CAD, you see none of that was right there. So let me go back to Hanko Trade again. See that? How did this come under this, like this bottom wick? So back to my Forex funds, this is the bottom of the wick versus on Hanko Trade. It was this weird price gap. If I hadn't had my stop loss in the right place, like my stop loss is about 15 pips. So I think it was about like right here. But that price gap almost came down and knocked me out. And I would have missed out on a winning trade because of some stupid price gap. That didn't happen on my Forex funds. It didn't happen on, this is FTMO. Where's the funded trader? This is the funded trader. So it's like, it didn't happen on none of my prop firms and stuff. So why is it happening on Hanko Trade? Then it happened again right here on this green candle. I don't know if you can see that, but this one wasn't as bad, but this green candle right here made some weird gap in price versus if I go to my Forex funds, you see, it's not the same. Or if I go to FTMO, it's not the same. Why is this weird gap in price right there? So anyway, for that reason, I'm going to go ahead and try somebody different for my personal broker. I want every advantage I can have when I'm trading Forex. I am not bad mouthing Hanko Trade. I understand that gaps in price can happen and all that, but again, this is just something that, I mean, it did kind of alarm me because I'm like, you know, that really could have knocked me out of a good trade. If this would have gapped down just a few more pips, that would have hit my stop loss. So I'm on the lookout for somebody else to get with right now. Just throwing that out there because I know, like I said, I was giving all the positives and everything when I was promoting them. I feel like it's only fair for me to point out a negative because it's something that I noticed, and you know, to say, hey, I'm not gonna put my affiliate link down there and then no more. I'm not after a money grab. I'm not gonna keep my affiliate link for them down there so you can keep signing up with them. You know, I'm not that guy. Like, I'm not about to just do something just for money if I don't feel ethical about it. And at this point, I can't really feel ethical about promoting them for reasons like this. So just throwing that out there, and so take that with a grain of salt. But yeah, I will holler at y'all on the next one.